Our numbers have already been put up on the website, and I'm sure many of you have already got the presentation. We have a very short presentation which the CFO will run through, and thereafter I will be open to, and me and my team will be open to taking any of your questions. I think the main point of attention today has been the stressed assets and the level at which our NPAs have come because of the AQR impact that the banks have been taking. Let me assure you that the entire impact of the AQR has been taken in the last and this quarter. Last quarter we had slippages of around 21,000 crores, of which 14,000 was the AQR impact. This quarter, out of 30,000 crores slippages, the AQR impact is only about 9,000 crores, and the rest that has been taken, of that only 1,039 crores have come from our NBG segment, that is from personal, agri and from the SME segment, and the rest, that is as much as 20,000, has come from the large corporate. This is on account of the fact that many of the large accounts were not on our AQR but on our other banks' AQRs. Now, we had the good fortune of going last, and therefore most of these accounts, they were known to us, and because they were already classified in other banks and showing additional stress, therefore these accounts too have been classified in our bank. As a result of this, we believe that much of the stress that has already happened on the bank's books, that most of it is currently recognized. We have still put another 31,000 crores of accounts under special watch. We would also like to mention that we do have provisions to the extent of around 3,300 crores, which is a floating provision and which could be used if the accounts in this special watch list also do slip. We also have about 1,100 crores of counter-cyclical provision that has not yet been taken because RBI has not allowed us to use that amount. Whatever has been used on the counter-cyclical this time is the permission that was given by RBI in FY15, but which we had not touched because it was not required by us. However, this time, because we have done a lot of cleanup and the amount of loan loss provision has gone up by 143%, therefore this amount has been utilized by us this year. So basically, I think the message that we want to give is that we have really and truly gone through account by account to try and determine what are the weaknesses and try and recognize all of them as proactively as possible. We also are working a lot in respect of resolution activities. Some of it you have already seen, but there is still much more that we are doing in that area. Also, I think the one other area that has been on people's minds is the merger. And there, as we have already stated to the public at large, we have sought permission from the Government of India to begin our negotiations. The permission will be forthcoming, we hope. It is not as yet with us. But even without the permission, we have tried to assess what the merged entity could look like. And I can assure you that there will be no big impact either on capital or on the NPA position, and that we are well positioned, in fact, to take the benefits of the merger. So with that, I would request the CFO to go through her statement, and thereafter we will take your questions. Thank you.
Thank you, ma'am. Good afternoon, ladies and gentlemen. Welcome to the members of the press. I'll quickly run through some of the performance indicators for the quarter and year end. If we can have the first slide, please. Our deposits have grown by 9.76% year on year, and domestic deposits have grown by 10%. As a result, if you see on the bottom right of the slide, we have gained market share by 57 basis points in this year, and over the last 4 years, we have been consistently gaining market share in deposits. CASA ratio has also gone up by 96 basis points, meaning that the growth in deposits is driven mainly by personal segment deposits and low-cost deposits. Retail advances have actually driven the growth in the loan book in this year. It's stellar performance of 20% plus as a result of which the share of retail loans in the total loan book has gone up from 20 to 22%. The corporate growth has been muted at 12.44%. This includes both the large and mid corporate. SME also, we have been cautious in growing the SME book, so we have grown at 4.44%, agri at 4.68%, and foreign offices have grown by 13.77%. Overall, the loan growth has been at 13.04%. These are two of our major products in the retail segment. Home loans now constitute nearly 60% of our retail loans, and the growth has been 20%. We have improved our market share in both home loans and auto loans to above 25%. These are the operating income numbers. Interest income has gone up by 7.41% year on year. The growth has been muted as compared to the loan growth, primarily because of the 70 basis points reduction in base rate that happened during the year. Interest expenses have gone up by 9.67%, a tad lower than the growth in deposits. NII as a result has gone up by 3.39%. Other income has turned out another stellar performance. We have grown by 24.73% in other income. Operating expenses, as you can see, we have been able to keep a very tight leash on operating expenses. Staff expenses have gone up by only 6.7% and overheads have gone up by 14.82%. But for the fact that in Q4 of FY15, we had a write back in depreciation due to change in methodology. If that had not been there, overheads would have gone up by only 11.62%. And OPEX would have gone up by 8.61% instead of 9.80. Operating profit has been a good performance. We have gone up by 9.41% for the whole year and 11.22% for the quarter. Due to the elevated level of provisions in the loan loss area, the net profit has come down for the year by 24.05%. and for the quarter by 66% to 1,264 crores. These are some of the yields and costs. Our yield on advances has come down by 55 basis points, again as an outcome of the reduction in base rate by 70 basis points. Cost of deposits has also come down by 17 basis points from 6.39 to 6.22, an indicator of our growth in CASA as well as the lower cost of term deposits that we have seen during the year. Net interest margin for March 16 has gone up to 3.27 for the domestic from 3.22 in December. From March 15 we have come down by 27 basis points. The international margin from March 15 has actually gone up by 11 basis points to 1.29. Our capital position remains very strong. Overall CAR has come in at 13.12% and Tier 1 at 9.92%. And I would like to highlight the fact that we have not yet taken the revaluation of real estate assets into our Tier 1, so that upside is still waiting to happen. During the year, we received 5,393 crores as equity from Government of India and we raised 10,500 crores as Tier 2 bonds. This is the snapshot of movement of NPAs. Chairman has already briefed you about our approach this time to asset quality. Our NPA percentage has gone up from 4.25% to 6.50%, and the net NPA ratio has gone up from 2.12% to 3.81%. Provision coverage ratio has come down from 69 to 60.69%. Moving on to the quick glimpse of the digital story that is happening in State Bank of India. Now 74% of our transactions are on alternate channels, up from 70% a year ago. And the point to highlight is that the branch transactions that are happening in branch and ATM together have also come down. We are moving away from cash to digital in the real sense of the word. And the key reason for this is our dominant market share in all delivery channels on alternate channels. much beyond our market share in deposit and advances. You can see in the mobile banking space, we are well above 1/3 of the market. In all other areas, our market share is significantly above our retail market share. On the financial inclusion front, we have continued to do a stellar work. We now have 9.28 crore accounts in financial inclusion, including Pradhan Mantri Jan Dhan Yojana accounts. Of these 3.96 crore accounts, we have seeded the Aadhaar numbers of 2.31 crore accounts, and RuPay cards have been issued to 4.21 crore FI accounts. The financial inclusion deposits, CASA deposits, have now climbed up to 8,437 crores. These are some of the highlights of what SBI is doing on the social media. I am happy to share with you that SBI is ranked number 1 among top 100 banks using social media by the Financial Brand in their list of Power 100 ranks banks. The other one point I would like to highlight here is that SBI Online is the world's 8th most visited banking site in the world. These are some of the awards and accolades. I'll just draw your kind attention to 2 awards which we are very proud of. One is the Helen Keller Award 2015, which we got for provision of employment to differently abled people. And the other one is the Gartner Cool Business Awards, which we got for most innovative digital customer service, that is our SBI InTouch branch, and the most innovative new digital product, SBI Quick, which is the missed call banking. Thank you, and we are now open to taking your questions.
On the 31,000 crore watch list that you've given us, could you give us more sense on which sectors they belong to? Also some outlook on how many of these you estimate would slip into NPAs in the coming few quarters?
Okay. Yeah. So the main ones would be power, around 4,700, iron and steel 4,200, engineering 3,500, oil and gas 3,300, construction 2,600.
Ma'am, how many of these do you expect you have some sense of?
So, it's best to be conservative when you are talking about these accounts. So, I would say conservatively around 70%.
Any sense on the slippages? You said 9,000 came on account of AQR.
That's right.
Could you again tell us which sectors? Also, in terms of your outlook for asset quality, you said you've taken into account not just the AQR list, but also lists that were written for other banks, not for yours. Is the worst behind now? Could you confidently, I know we ask you this every quarter, but now that you've taken such preventive measures already, could you give us an outlook in terms of NPAs? Can you see better days ahead for SBI?
See, as I told you, we've slipped around 30,000 crores. 9,000 has come from the AQR impact, and it doesn't really matter which segments, because we all know the segments they have come from. They are mainly from power, steel, those are the main segments, and construction. 1,000 is on account of regular slippages from my national banking group. So you are left with 20,000. So 20,000 is obviously all large corporates and mid corporates. All right. So to that extent, yes, we have upfronted much of the pain that could have occurred, could have, mind you, because again, we do believe that many of these accounts, and most of these accounts, in fact, they are actually working accounts. So they are not manufacturing units that are closed down, they are not roads that nobody is driving on. So these are actually accounts that are still functional, but they are stressed because they don't have enough cash generation in order to take care of their immediate interest and installment payments. Okay. Now going forward, if the economy does better, I do believe that even the ones we have slipped, much of this should come back. Okay? And in respect of the ones that we are showing as stress, again, I have said that conservatively we will take 70%, but if the economy starts doing a little better, if the demand comes back, maybe the slippage could be as low as 30% also.
And what kind of recovery are you seeing going ahead? Also for this quarter, could you give us the figures for upgradation, recovery, write-offs?
Now see, upgradation, recovery, write-offs, so whatever is there this quarter, we will give you those numbers. You have just 1 minute. 27, yeah. So, during this quarter, the recovery has been 1,627 crores. Upgradation is only 97 crores. And write-off has been 3,208 crores. Okay?
Ma'am, Ashwin Mohan here from ET now.
Yeah.
I'm over here.
No, I think you've asked a number of questions. Allow others also.
Ma'am,
Okay?
thank you so much. Ashwin
Yes.
Mohan here from ET now.
Yeah.
Could you help us understand what led to the healthy margins despite the high NPA stress? In fact, we're given to understand that the gross NPAs are perhaps the highest in the last 6 years. That's the first question. Secondly, you have a high exposure of about 17% to the infra sector, 7% to the iron and steel sector. What's your view on the progress the bank is making in these sectors? And one final question, I'll slip that question in as well. And that's on the sale of the non-core assets. In the past, you've mentioned that you're looking to sell a few of the non-core assets. Have any non-core assets been identified by you? Thank you.
The non-core assets, obviously are getting identified by individual borrowers and they are getting sold as well. So it would be individual borrower-wise as to what would be the level of sale. And it need not always be non-core. There are borrowers who are looking at selling their core assets as well. So whatever is required in order to bring back liquidity into the system, that is being done. In respect of the exposure to the top stress sectors, our exposure in respect of power, iron and steel, textiles, construction, road, cement, we have tried to take a reckoning of the entire exposure, and that works out to only about 1.77% of our balance sheet. So if you look at our power exposure, it's around 1,36,000, iron and steel is 82,000, textiles is 43,000. You have to understand that our entire trade portfolio is 15 lakh crores. So considering that, this is really, if you look at the stress in this sector, see, if out of 3,18,000 crores, which is the stressed amount in this sector, already 14.22% is already NPA there. So the remaining amount that we are seeing as a 5/25 restructured and the remaining stress would be as low as 1.77%. So I don't think we have anything very great to worry about in respect of the exposures that we have to the remaining stress sectors. I think those were your two questions. There was another one. What was
Ma'am, just two more, I'll slip them in.
No. You take it in turns now. I think you take it in turns.
I'll ask you one more question, and that's on the entire process as far as the merger of the subsidiaries is concerned. Now, of course, in the beginning, you mentioned that you're still awaiting the nod from the government, but do you foresee any challenges? Because it's going to be a complicated exercise.
You see, any merger has its challenges. Means I have never seen a merger in this entire world where there has been no challenges. But then challenges are also opportunities. It's two sides of the same coin. So yes, there will be challenges, but I'm sure we'll be able to take care of them and we'll be able to take care of the opportunities as well. So overall, net, we believe that the merger will be a good thing and that there will be benefits that will accrue to all of the parties who are involved in the merger.
Thank you, ma'am.
Yeah, next person. Yes, please.
Here from Cogensis Information Services.
Yeah.
Give us an outlook on NIM with MCLR kicking in. How do you see NIM panning out in FY17? Especially on the international NIM, there has been an uptick. The second question on large corporates, there is around 17% growth. Would it be fair to assume those credit lines, working capital credit lines have been used? Thank you.
See, on the NIM, at this point of time, we are at 3.27 domestic. On the IBG, it is around 1.29. I don't think we are seeing any extraordinary pressures on NIM. However, please do remember that this is a falling rate scenario. It is an accommodative cycle. And obviously, whenever there is a rate cut, there is also a pressure for bringing down interest rates. So to that extent, yes, there could be some impact on the NIMs. However, we'll try and hold it as steady as possible. And we don't believe that there will be any major impact on the NIM other than whatever comes in on account of the fall of the MCLRs. Regarding the other one, I would request Mr. Sriram to answer.
Large credit growth that has come, 17%, basically is on three sectors. One is the power sector, where we have increased some exposure to the public sector units, very strong public sector units. So there is there was an opportunity there and we have taken that. The second is, of course, the services sector, where we have lent. Now, our traditional lending to the NBFC sector was very, very low, and that was given us some room for us to improve that as a percentage of our total exposure. So, over 10 to 12 NBFCs we have seen, and we have taken some exposure on that. We also tried to look at certain completed projects where there has been no exposure for us. And in those sectors, again, we have tried to take some exposure on that. So all in all, these three are the major areas where we have grown. And if you see over the last 3 years, the growth of this portfolio, A-rated and above, is significantly improved. In FY16, the A-rated portfolio of new business that we have done is almost 65% A-rated and above. So it's very, very calibrated growth. It's a growth that we have seen, we feel that will help us in the long run.
So how much is your target for loan target for FY17?
FY17 on the overall we expect to grow around 13 to 14%.
Ma'am, this is Supriyo from Reuters.
Yeah.
Can I just ask you a question? What is the size of the watch list that you have in your mind?
Size, we told you, no?
It was there
Around
on the screen,
31,352 crores.
You can put it on the screen as well.
Yeah.
हेलो मैम
Yeah.
मैं आलोक की सेक्शन में जी बिजनेस है मैम जो इस प्रोविजन की वजह से प्रॉफिट डिस्ट्रीब्यूशन हो रहा है वो कब तक कंटिन्यू होगा प्रॉफिट कब तक ये करता है और उसमें हमारे पिछली जो वित्त मंत्री के साथ बैठक हुई है उसमें बैंकों को किस तरह का किस तरह से उम्मीद है कि सरकार की तरफ से मर्जर के लिए और मामले के लिए किस तरह का डायरेक्शन मिलेगा?
देखिए बैंकिंग जो रिव्यू लेने वाले हैं वित्त मंत्री वो क्या हम लोग को डायरेक्शन देंगे वो हमारे लिए बोलना बहुत मुश्किल है क्योंकि मर्जर की जो बात थी जो स्टेट बैंक की बात थी वो तो ऑलरेडी हो चुकी है यानी कि इसका प्रक्रिया जो है वो तो शुरू हो चुकी है तो उसके बारे में हमें नहीं लगता है कि हमारे बैंक के लिए कोई डायरेक्शंस होगी हो सकता है दूसरों बैंकों के बारे में हो सकती है बट इट्स डाउटफुल दैट इट विल हैपन इन एन ओपन मीटिंग तो वो सारी बातें जो है कंसोलिडेशन की बातें या मर्जर की बातें वो इंडिविजुअल बैंक से ही की जाएगी ये जो वित्त मंत्री करने वाले हैं ये हमारी जो क्वार्टरली रिव्यूज होते हैं उसी तौर पे है क्वार्टरली रिव्यू है क्योंकि सारे बैंकों के फिगर्स आ गए हैं वो हमारे बैंक का भी फिगर्स आ जाए इसी के लिए वेट कर रहे थे तो सारे बैंक्स के फिगर्स आ गए हैं ईयर की जो परफॉर्मेंस है ईयरली परफॉर्मेंस हो चुकी है तो वही परफॉर्मेंस रिव्यू करने के लिए वो हमें बुलाए हैं या
Ma'am, SMA 2 accounts that you have currently also, SDR and 525 also, could you give us the figures? And one last question on SDR that you've undertaken so far. Have you made any progress in finding buyers, especially for gas-based projects?
We don't have gas-based projects. So you should ask that question to other banks that have it. The only two gas-based projects that we have, one is with Torrent, which is not required to be, we don't need to do anything because they have merged with the main company, and the other one was RGPPL, where, as you know, a workout has already occurred. In respect of RGPPL, we have already put through the scheme of merger. It has now to actually get formalized in all the boards, as a result of which the terminal, that is the LPG terminal, that is being taken over, or rather that is being taken over for management by GAIL, though the shareholders will remain the same, and they are going to convert it into a 365 days, that is a year-round terminal. And on the other side, the gas-based project is currently generating 500 megawatts, which is being supplied to the railways. So RGPPL is really not one of those where we are looking at any sales or anything. So on the gas-based project, I won't be able to give you much color. On SDR and on 5x25, Sridham will tell you. But this quarter, we have hardly done anything. It's very, very little.
Regards SDR, we continue to have the same more or less 16,000 crores, which was there last quarter. There's only one very, very small account of about 50 crores where we have exposure, which is added. So it is not really significant there. In terms of progress, there has been some significant progress in 2 or 3 accounts. While this is the first of its time in terms of pushing through a certain process which is new to us, I think we will be quite hopeful that in the coming days we should be able to see at least a couple of cases being closed out. Is that all right? What else you asked? Yeah, there is nothing in the pipeline as far as SDR thing goes. In 5/25 also there has been nothing really added in terms that there are only a couple of accounts which have added in Q4, 2 accounts of about 800 crores and nothing beyond that. So as the total we have about 19,000 crores and comprising of 16 accounts. Now SMA2 actually part of it has been already put in the thing. It is 31,000 that we have as part of the stress list that we are looking at, and that is one of the analysis that we did account by account, and we have come out, I think, in terms of even the sector wise we have broken down, and some of the things that the chairman said, it adds up to about 31,000 crores. And as a percentage of our total loan book size of 15 lakh crores, it is quite insignificant at about 2%. So we are quite hopeful that of that also we would be like to keep a conservative guidance that about 70% could be stressed out of that.
Just a clarification, most of these 31,000 crore special mention accounts, watch list accounts are from the special mention to 60 days overdue?
Yes.
Okay. Ma'am, one more question. One question on the merger, ma'am. What are the costs of this merger? Could you tell us more about that, especially on the pension bill side?
Actually, on the pension side, the maximum amount that we are anticipating would be in the range of around, say, 3,000 crores. If you look at the other side, where will this amount come from? Yeah, it's the third benefit. It's not the pension because they already have the pension. So it won't be the pension that we will be giving. It is the other third benefit that we are talking about, the PF actually. So the max to max it would be around 3,000. However, if you look at the benefits that will come, what are the benefits? In respect of State Bank of Indore and State Bank of Saurashtra, we had found that within a year, we normally record about 100 basis points improvement in the costs. So to that extent, there would be a pretty large saving over there. The second thing is we have found that if you look at the treasury, if you look at the treasuries of the associate banks and you look at the portfolio returns of the associate bank treasuries, the portfolio return of our treasury is almost 92 basis points higher. The entire portfolio of the associate bank's treasuries is more in the range of 1,30,000 crores. So even if you if you improve the returns from there, if not by 90 basis points, even by 50 basis points, there is a pretty large amount that actually we can garner from that itself. The third thing, of course, is that there are a lot of redundancies which we will be able to take care of. Currently, there are 6 treasuries, there are 6 corporate centers, there are 6 of everything. So if you look at those cost overlaps as they go down, as I told you, there would be a lot of efficiencies that come in from there. Also, we are looking at, from the capital side of it, the Bharatiya Mahila Bank will net us about 1,000 crores of capital. And if you look at the associate banks and the fixed assets that they have, we anticipate around 700 to 750 crores from the revaluation of their fixed assets. So overall, net, I don't think the costs will be anything that will be overwhelming. In fact, we should actually work out to the positive after taking all of these things. Ma'am, she was standing from a long time. Please,
This is Shomonti from Mint. I have a few questions on, you spoke about the asset quality. We are doing an internal exercise to identify more bad loans and provide against them. One question on that. The other one is on the recovery. Will you be doing it on your own, or will you be depending on the ARCs to do it to buy these bad loans? And on the bad loans, will it be a separate entity within SBI, something like that you are looking at, maybe like a bad bank or something?
No, actually speaking, if you have seen the numbers we have put out, as I told you, out of 30,000, only 9,000 is accounted for by AQR. So obviously we are doing a pretty stringent internal exercise in order to come out with all of these numbers and classify them, plus the list that we have put out regarding the outlook on the stressed assets. So obviously there is a lot that is being done internally in order to determine where the weaknesses lie and what is to be done about it. In respect of how we intend to resolve them, we intend to use all of the tools that are available to us. So it is not as though we will not use ARCs. However, as you have seen during this 1 year, we have seen very little of ARC sales. In fact, in respect of our recoveries, last year, there was a very large component that came from ARC sales. This year, in fact, that component is very small. And I think we have got only about 233 crores from sale to ARCs this time in the manner of cash recoveries. So it is far lower than what we had last year. The reason for that is that the Indian ARCs at this point of time, they are stressed both on account of lack of funds as well as lack of bandwidth, management bandwidth for turning around so many of the assets that they have taken last year. So to that extent, this year the ARC scene has not been very productive. But going forward, we expect to see this change because, as you know, the government has allowed 100% FDI in ARCs. The rules have not yet been notified, but we know that there are a number of international ARCs that are standing on the sidelines waiting for the rules to be notified so that they can come in. Many of these are very credible names. They have very large assets in various geographies across the world, and they have a very good track record of actually having turned around these assets. So we know that these ARCs are waiting for these rules to get notified, and we are hopeful that in this coming year we'll be able to do business with quite a few of them. So resolution will happen through DRTs, resolution can happen through OTSs, resolution can happen through deep restructurings, resolutions can happen through ARCs, but whatever is the means that is available and which is at our disposal, we will be using all of them in order to bring about resolution. Now that we have sort of identified everything, I think the biggest responsibility that banks like us have is to lead the matter on resolution, and we intend to do that fully. I think your last question was? Bad bank. No, I don't think there is a need for a bad bank within us. However, as you know, we have a stressed assets management group, and we have a DMD heading a stressed assets management group. So as soon as a loan is classified, unless it is one that needs very expert handling, such loans are immediately handed over to our stressed assets management group, and they have their systems and procedures as to how to go about it and how to actually handle it. Much of the kind of pan-India Lok Adalats that you've been seeing, the e-auctions that you have been seeing, all of that is handled by our stressed assets management group. So they are already working very well. They have developed a lot of expertise in the last 2 years, and it's a continuing exercise. They will continue to do that. But within the bank, we will not have a bad bank or anything of this sort.
If you can allow me one last question.
Yeah.
On the economy, on the broader economy, what are your views and maybe how is it progressing and what is the way forward you see for the banks?
Okay, on the broader economy, yesterday we had a customers meeting, and I was sort of talking to all of the customers and trying to assess from them what is called business confidence. And I'm glad to say that almost 90% of them actually displayed much more confidence than they had done a year back. And being a Bengali, I must say that what Bengal thinks today, India thinks tomorrow. So let's hope that that confidence is what I saw yesterday is reflected in other parts of the country. I think it is. We are seeing a lot of traction in many segments. However, the traction that we are seeing is still government-led, in the sense that if you're looking at roads, these are mainly EPC contracts. If you are looking at certain areas like, say, the dedicated freight corridors, they are basically funded by the multilaterals. If you are looking at railways, that's also EPC. Transmission, again EPC. So, to that extent, I would say today the economy that is reviving is being led more by government expenditure than by credit. And I have been saying this for a little while now. I believe that the economy will revive and credit growth will follow. It won't be the other way around. Credit growth will not precede economic growth. Economic growth will happen first. And again, the reason for this is that even today, demand is not very robust in the economy. Demand is in the range of 70%. Unless and until demand goes up to about 80-85%, people don't feel confident to start investing. The private sector investments come in only when capacity utilizations are in the range of 85-90%. So we need to see that demand getting revived and for the demand to come back in order to see that investments coming back. However, I will still say today that the pipeline of our project exports, projects that are there with us, project financing, is better today than it was 12 months back. So yes, we are beginning to see projects, we are beginning to get them, but they are still not coming in very large volumes. But the signs are all there, and I think we just have to wait a little more. But we do believe that we are on the mend and it is on the upturn.
Ma'am, I have a question. This is from Reuters again. The NIM has been improving quarter on quarter. So what is the reason behind that? And what is the outlook on it in the next quarter, 2017 quarter? I mean, FY17 quarter.
Anshula, would you like to talk about that? For FY17, we do expect that NIM will be a little under pressure. That is for two reasons. One is that, the base rate linked book has already priced downward 70 basis points. We will see the full effect in this year. And the new loans are linked to MCLR. You would have observed that throughout the last year, we have been reducing our deposit rates. So the cost of fund is coming down for us, which is a good thing for conserving interest expenses. But since the MCLR is now very closely linked with the cost of funds, it will also be a downward impact on the MCLR. So net, while we start getting upside on interest expenses, I think once the loan growth picks up in the second half, volumes will make up for the reduction in base rate on MCLR, and then we should see some conserving on the margins in the second half. The other thing also is, of course, our treasury has performed very, very well this time. And that is one income that has really sort of supported us. One other thing on the NIMs itself is the fact that, when there are very large slippages, NIMs will obviously be under pressure because there is a lot of clawback of interest. So as the slippages also come down, we should find some support in the NIMs. So I think net, we'll see NIMs around the numbers that we are giving now, because while we might get some upside from the reduction in the slippages, but there will be obviously a pressure on account of the fact that it's an accommodative cycle and interest rates are expected to come down.
Ma'am Chairman, I am from Business Line. I have two questions.
Yeah.
You have given an indication that your Tier 1 capital doesn't include real estate assets.
That's right.
So if there is any consideration of that, what would be the upside? This is number one. And number two, regarding the iron and steel assets which are under stress for quite some time, there has been one very particular experiment done by SBI in terms of converting one CDR to SDR. This is in case of electro steel, one of the biggest borrower. Now, after that, it has also been reported that from SDR it is going to come back to again to the normal or stress asset. What is the situation and how the experience has been?
See, I will not talk about individual accounts. I have never done it and I don't intend to start now. The only thing that I can say is that iron and steel is under inordinate stress. Of course, in the recent past, in the last 3-4 months, on account of the MIP, the stress has come down. Not only that, it is also a fact that subsequent to the imposition of MIP, the international prices also firmed up very, very rapidly. So that today the difference between the international prices and the domestic prices is only 8%. Earlier, the domestic and the international prices were differing by as much as 40%. So obviously, there was a lot of stress in the industry. Today, that stress has definitely come down. But as you know yourselves, that MIP is a temporary measure. So we have to see how long it remains. We also have to see whether the demand that we are anticipating will come back in the economy. And that is the only thing that can actually support the iron and steel industry. Of course, there are certain other measures that can be taken, logistical measures, other measures to ensure that the iron and steel industry gets raw materials, gets power, gets inputs at international prices. So, there is a lot of work that is going on currently by the industry itself, by the Ministry of Steel, in order to find out what are the best ways in order to ensure that our industry is as competitive as the rest of the world. In any case, India happens to be one of the most lowest cost iron and steel manufacturers. So to that extent, we are actually competitive, but we need to ensure that given the kind of pressures that come to us from some of the very large countries, that we are able to withstand those pressures. Regarding this revaluation that you talked about, it would yield anything upwards of 10,000 crores. We had earlier given an indication that our 2011 number was in the range of 20,000 crores. Since then, the revaluation has been done to a great extent and the amount has gone up significantly. So we believe that at the minimum, we should be looking at being able to add another 10,000 crores.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.